Welcome back! Hopefully you just watched part 1 of my top 10 tips for first-time homebuyers. If not, you can find that video in the description below. Let's get right into my next 5 tips, or shall I say secrets, because a lot of people might not know these things. Some lenders might not either. That's why you need to work with an experienced lender to help you achieve your home ownership goals. Number 6, what's required to get a loan? All right, now this one, there's a lot here, so stay with me. First, the lender's going to document what income that you're going to be able to produce that meets the lending guidelines, that the lender can determine that you have the ability to repay the money that you're borrowing. If you're employed, if you're using employment income, how long have you been there? Do you work variable hours? What's the average of hours you're working? Are you self-employed? Do you have a second job? All of those questions are going to go into the employment part of the equation, as well as the income part of the equation, because the employment will drive the income unless you're retired and receiving Social Security or pension, and that's perfectly fine. That is documentable, and that is something that the lender will dive into with regard to your particular scenario. Once income's determined, the lender is going to look at your credit report and ask you about the debts that you have. So in addition to anything that's on credit report, do you pay child support or alimony? Those will be calculated into your debt to income ratio. The debt to income ratio is also one of the lending guidelines and thresholds that each lender has. So once we evaluate your income and we know what your debts are, then we can back into the price point minus the down payment of the home that you can pre-qualify for. Tip number 7, you may be wondering what loan programs are available. As a general rule, there are 4 types of loan programs available in our country. 1 is going to be an FHA loan, 2 is going to be a conventional conforming loan, and 2 gets an add-on, we'll call it 2B, a conventional jumbo loan. And then there's VA loans as well as USDA loans. Each loan program is going to set its own credit criteria and requirements. Tip number 8, who are the people on your lending team? Now, many times you're talking with your loan officer or their loan partner, but realize there's a lot of people in the village that you have behind you on that lending team. So a couple of those people are, you're going to have your loan officer. Many times you'll have a loan officer support team, and that could be a loan partner, a loan assistant, somebody that's supporting the loan officer, a strategy technician. We see that a lot in lending as well. And the reason for all these different people is it takes a village, honestly, to get through the loan pre-approval process. And so the lending industry has gotten very good at finding the skills for the people that's needed. And so that's why there's a lot of people that are touching your home loan file as you move through from the time you apply to the day you get your keys. Another one of the very important roles is going to be a loan success coordinator or processor, depending on the lender that you're working with. They're responsible, once you're under contract, they're going to take your loan file and make sure that you're keeping to the timeline and you're closing on time. They're going to ask for additional documentation. They're going to prepare and make sure that your closing disclosure is issued to you on time. They're going to review all the numbers, pull in your homeowner's insurance, your title company fees, all the different fees and costs that are associated. The loan processor, or in my world, loan coordinator, is a very, very integral person that helps people achieve success of home ownership. There's also an underwriter. The underwriter is the person that is going to actually sign and approve your home loan. They're going to review all of the documentation that the loan officer and team has submitted into underwriting, and they're going to ensure that it meets the lending guidelines. Once you have your loan approval, the loan closer, so the person that's responsible for preparing your final closing disclosure and your final loan documentation that you'll need to sign, that's your loan closer. And then once you've signed those documents, behind the scenes, which is where most of this is happening, the loan funder is going to prepare to have the wire for your home loan funds sent on the day of closing. Tip number 9, how do you get a lower interest rate? One way to get a lower interest rate is to maximize your credit score. So better credit scores can drive a lower interest rate. Another way that you can get a lower interest rate is to consider a seller buy down program. And that's where the seller would contribute to your closing costs, and the lender in that scenario is going to use that contribution from the seller to lower your interest rate. And finally, another way to lower your interest rate would be to pay discount points. And discount points are a cost associated with a respective interest rate. For example, maybe the lender is quoting you a particular rate and it has 0 discount points, meaning that there's no cost for that rate, but you want to buy the rate down. Let's say that you now ask the lender, what interest rate can I get if I pay 1% in discount points? Discount points are 1% of your loan amount. So if you're taking out a $400,000 loan and you're going to pay 1 discount point, that's 1% of $400,000 or $4,000. And now what you'll want to know is, for $4,000, how much can I buy down my interest rate? Interest rates and discount points are going to vary every single day. They're going to vary based on the loan program that you're purchasing, the occupancy, is it going to be a primary residence, a second home, or an investment property? Lots goes into the interest rate discussion. It is good to know that when you see stuff published out there online, many times that is for a point in time. You got to read the fine print, because that's where all of the detail is that's leading to that rate quote that you're seeing out there online. Best to talk with your lender to decide what your scenario is and then the best strategy for you to obtain the lowest interest rate. And tip number 10, things not to do during the home loan process. Don't change your job unless it's absolutely necessary, and if it is, be sure you're telling your lender before you're changing jobs so they can get all of the details and ensure that it's not going to impact your pre-qualification. Don't go buy a car or appliances. This is always a big one, especially for first-time home buyers. You're getting excited, you're close to getting down to the close of escrow and getting your keys and moving in, and you might need a washer and dryer. So you go to one of the big home improvement stores and they're offering, 0 interest for 24 months, and you apply. Guess what? That's still a debt obligation, even though that there's no payments for 24 months. So what happens is the lender has to calculate that into your debt to income ratio. And if your debt to income ratio is tight, that could put you in a position where you can no longer qualify. So these are the things that you absolutely want to be thinking about as you're moving through the home loan process. If you have questions before you buy a car, buy appliances, change jobs, be sure to reach out to your lender and ask them, is this going to impact my home loan pre-qualification? Now that you know my top 10 tips, you may be interested in getting pre-qualified. We can put together a personalized plan for you. Schedule a free consultation with one of my amazing team members by clicking the link in the description below. Be sure to subscribe to this channel for more mortgage education and check out this next video on why credit scores differ. I think you'll find it very interesting.